So we're delighted to welcome Jacob Amaral, who is actually in Toronto, north of Toronto, and just north of the Canada-US border. But he's very present in our info market for the whole continent, for the US as well. He's an expert in automated trading and education in automated trading. He's got his own company, We Trade Labs, and his YouTube channel has, I believe, he's told me 26,000 subscribers, going on 30,000 in due course. And certainly automated trading is one of the things many of us look at getting into, and yet it's a pretty complicated picture to decide how to do it. So to tell us a little bit, give us some guidance on how to get into automated trading, I'm just going to pass it over to Jacob. Jacob, please go ahead.
Thank you, Don. I appreciate this opportunity, and I appreciate everyone here that's coming to spend some time in their day to learn about automated trading. I know all of us are pretty busy, so I do appreciate each and every one of you. And hopefully today I can teach you or give you a basic knowledge of what automated trading is, what it's about, some of the benefits, cons, and how to be good at it. So hello, my name is Jacob Amaral. My official role is a quantitative trader at the company I work for or consult with. But quantitative trading or algorithmic trading are kind of interchangeable words. You'll see quantitative trading more in the bigger firm space. Big hedge funds will usually use the word quantitative. But for most people, when they're searching stuff on Google or YouTube, it's usually algorithmic, but they're the same thing. And I'm also a YouTuber. I also upload videos. I show people how to algorithmic trade. I show my performance. I show how to build strategies, that sort of stuff. And I've been doing YouTube for a long time, over 10 years, but I didn't really take it seriously until probably about 4 to 5 years ago when I got into this space. So yeah, let's get started. First up, we just have a quick disclaimer that this is for informational purposes only, just to kind of cover me a little bit, but obviously this is just information. So I just want everyone to know that. So a little bit about me before we get started. So I currently work as a quantitative trader for a family office, and we trade capital for a pretty big family in New York. And I help build strategies, maintain portfolios, operate the trading systems for that family office. I also own a company, We Trade Labs Incorporated, where we build mostly software projects for brokers firms and other hedge funds for over 4 years. So we would build any software related kind of solutions for the financial and trading space. And I did that for a long time. And while I was doing that, I also got into automated trading because I saw some of my clients, some of the brokers and firms, how they traded, and wanted to get a taste for myself, what it's like to operate. I trade my own money with my own trading systems as well. And you'll see a lot of that on my YouTube channel. And segueing into that, I have a YouTube channel teaching people how to algorithmically trade, and also show my performance and how well I'm doing for the month. I studied computer science in college, and I mostly had a computer science background, not really a finance or math background. I kind of learned that through my career and was able to kind of bridge that gap between finance and computer science. So let's move on to the next slide here. Okay. So here's some of my videos that I show on my YouTube channel. This was I think this is the last 12 videos that I show, but I know someone posted in the chat, but it's just my name, Jacob Amaral. So these are the types of videos that I kind of show you, some strategy ideas using ChatGPT to build strategies, showing my performance for the month, my portfolio, that sort of stuff. And the reason why I do YouTube, because a lot of people ask me, why don't you just trade and don't talk to anyone? If you make a lot of money that way, you don't need to show anyone anything or talk about anything. And while that is the case sometimes, I've always liked editing and uploading videos and sort of being entertaining while educating at the same time. I've always loved that. It's been a passion of mine. So that's why I do have the YouTube channel. Every time I can upload a video, I'm happy and I'm excited because I love being creative in that sense. Now that quality also spills over to trading, where I have that creative process of figuring out new trading systems, new ways to enter trades, exit trades, new markets to trade, that sort of stuff. It's that same passion. But that's why I do YouTube. I like making videos, and it allows me to be a little bit more artistic than just the trading aspect of being more logical. There is still a lot of artistic and creative opportunities in trading, but stuff like, doing a thumbnail or, putting text in a back shadow, like that just creative artistic aspect I enjoy as well. So what is algo trading? Let's start with that. Let's start with the basic question. Basically, I have a paragraph here, but basically you're telling a computer to execute trades for you. At the end of the day, that's like the basic definition of algo trading. You tell a computer, here's a bunch of rules of when to enter trades, when to exit trades, risk management. I want you to do it for me. Okay. And that can seem really cool at first. Like, wow, that's super cool. It's automated. I don't have to look at charts all day. But to be successful in it, the computer is only as smart as you, right? So that's why my role as a quantitative trader is, at the end of the day, I'm still a trader. Whatever I tell the computer to do, it's going to be as smart as me for the most part. So the inputs that I'm giving it, the trades, the entries and exits, the profit targets, the risk management, need to be smart. And in a separate slide, I'll show you what it takes to build good trading systems. But that's basically algo trading. We're telling computers to buy or sell different assets or instruments on our behalf. Now, algo trading is widely used by, hedge funds, banks, pension funds, and individual traders. And even today, a lot of traders, individual traders will use algorithmic trading to their advantage. A lot of the brokers algo trading was even kind of started in the early 2000s. It got really popular then with the institutional firms, but not on the retail side. The retail side has kind of exploded, I think, since probably 2009, 2010, when, brokers like Interactive Brokers or TD Ameritrade started offering ways to algo trade with their back end. So now everyone can use it. Everyone's kind of has access to it. And there's still a lot of opportunities to make returns with it. There's various types of strategies you can use when algorithmic trading. So trend following, where you're, following a certain trend. So if you notice that an instrument is going up, maybe you want to go buy and, hope that, I wouldn't say hope, but if you have some type of an edge that it's going to continue that trend, then that strategy is going to work out for you. There's mean reversion strategies where you're sort of doing the opposite, where you think that an instrument or asset is going to revert to the mean or the average price. So if you see an instrument that is way undervalued, it's at such a low price, and you think it's going to go back to an average price, you would buy that. And if you have an edge that it's going to return to the average price, you can make a return on that. And then there's statistical arbitrage strategies, which are a bit more complex, where you usually take two or more instruments, and there's some relationship between these two instruments or assets, and you're able to maybe buy one and sell the other, and exit when they kind of converge, and you're able to kind of make money on both sides. But all those strategies can be customized and adapted to meet your needs, whatever your investment or trading goals are. And you can get very creative in building really powerful portfolios with those types of strategies. So how do you get started with algorithmic trading? And here's 3 basic steps. So number 1, you got to pick a brokerage and a platform that supports algo trading. Personally, I use NinjaTrader. NinjaTrader is both a brokerage and a platform that allows you to algorithmically trade. So you can code strategies, you can chart instruments, you can buy and sell just like you can with any other common brokerage like Robinhood or Interactive Brokers. But it gives you more features when it comes to running automated strategies. And it gives you an interface that you can use right out the gate, sort of streamlines the process. So that's my platform that I use to to run my strategies. Now I use Interactive Brokers as my brokerage account. So that's where my money is. That's where the trades happen. That's where my P&L is and all that sort of stuff. And NinjaTrader can connect to Interactive Brokers. Now, I know most of you are watching are probably American. And one of the reasons why I use Interactive Brokers is because I'm Canadian and NinjaTrader doesn't accept Canadian residents for their brokerage. But if you're American and most other countries, NinjaTrader will accept you and you can just open up a brokerage with them. And it's actually a little bit cheaper if you do that. So that's step number one, pick your platform and brokerage. There's a lot of other platforms out there. There's, TradeStation, there's Quant Connect, many others, and many other brokerages. So you kind of have to do your research and pick one, but that's the fastest way to get into this space and to be successful is picking an existing platform. Most bigger funds and firms will have their own proprietary system that they've built from the ground up, and that's possible to do as well. But if you're an individual trader, that could take you months or years to perfect before you even start trading. And most people don't want to wait that long. So that's why I recommend using an existing platform. If you want to sell maybe a software as a service or you want to sell your own platform, then yes, I'd recommend building it from scratch, of course. But if your goal is to make money trading, then you want to use an existing platform, which is going to be faster for you. Step number two is set your investment or trading goals you personally want to achieve. How much do you want to make a year? How much are you willing to risk a year? What's your return to drawdown on a yearly basis? If you want to make 20% a year, you're probably gonna have to risk 10 or 15% a year to get to that goal. So you want to set those goals before you start algo trading. So you know where you're headed at and you know the next step to get to. And number three, simply, I wouldn't say simply, but building a portfolio of strategies that meet your investment needs. So that's sort of the bread and butter of algo trading. You're building a portfolio, you're acting like a portfolio manager, but for yourself. And you're going to have multiple automated trading strategies in that portfolio, right? You won't have success with one strategy. Usually a strategy will only work for a couple months of the year and not work for the other months because of the market conditions and market regimes. So you need multiple strategies to be successful and have different diversification in your portfolio. So you can either, in the down months, not lose as much or just win small in the down months, right? And you'll need multiple strategies to do that. One strategy will not make you successful. And that's why a lot of, portfolio managers, big names like Warren Buffett or Ray Dalio, they have multiple stocks. They have multiple positions in different sectors to diversify and, kind of survive for a bit when things aren't going great. Because when things are going great, you get comfortable and you're like, things can't go bad. We'll be fine. And then a new market regime will hit and, you'll see your P&L start going down and you need diversification to kind of save you during those times. So instead of holding multiple stocks, you have multiple strategies, right? That are trading different markets and maybe going long and short to reduce that volatility you're going to see in your account, So what are some best practices when it comes to algo trading? So number one is backtesting extensively. So when you have an idea for a strategy, say you wanted to buy Tesla stock on Monday and sell on Friday, how would you know how well that's going to do? Like, should you even trade that strategy live? Well, to do that, you do a back test where you code the rules and you say, all right, on Monday, buy Tesla, on Friday, sell it. And you would run it over a period of time, an historical period of time, maybe the last 2-3 years. And you would run it over that period of time and get sort of a number, like how much is it going to make? Is it going to make money? Is it going to lose money? What's the volatility? What's my return? What's my drawdown? That sort of stuff. You're going to get a bunch of kind of report card items of how it's going to do. And all platforms allow you to backtest. NinjaTrader allows you to backtest, TradeStation. And they have lots of documentation online on how to do it. And it's very, very simple. So that's number one. You need to backtest your idea extensively to see historically if it did well. Number two, you always need to include slippage and commissions in your backtesting. Okay. So in real time, right? I don't know if there's any traders here, but anytime you submit a trade, you're going to get a little bit of slippage, which means you submit an order, right? And you see a price on the screen of what, say, Tesla stock is currently trading at. You usually don't get filled at that price. It's usually a bit worse, right? It might be 1 cent worse, it might be 3 cents worse, 3 cents worse. So that's what slippage is. It's the slippage of the current price of an instrument or asset and what your order actually gets filled at. So you always going to need to include that when you're backtesting to be more realistic, and commissions as well. For futures, I mainly trade futures, and I'm paying anywhere from $1 to $2 a contract for a trade. So I need to include that in my back test as well, because if I don't include it, then my back test is going to look better than what it actually is when I trade live. Because when I trade live, I'm always going to have slippage and commission. So I better include it in my back test to be more realistic. Number 3 is testing out of sample. So when you're back testing an idea and you say you test it for 2 to 3 years and you say, oh, it looks good, it makes money, cool, great, let's trade it live. Well, what if you gave it new data? What if maybe you back tested from 2018 to 2020 and it did really well? But what about 2021 to 2022, right? Did it still do well in those markets, right? Because every year there's something new. There's new market regimes, there's news, there's catastrophes, and all of that affects the market, right? Your strategy should kind of do well in all those scenarios, or at least most of them. So that's what testing out of sample is. You're testing with new data. And what I recommend is when you initially backtest your idea, you do 2 years, you pick 2 random years, and then your out of sample is another 2 years. And that gives you some more confidence for the strategy running live. Number 4 is trading different markets. You want to build strategies in different markets to kind of find opportunities, right? You don't always want to be trading the same market because you might be losing opportunities in other markets. So for example, I trade most indices, I trade gold, I trade oil futures, I trade natural gas futures. It allows me to find opportunities in those other markets. I'm not always right, not always making money in those markets, but at least being exposed to it helps you reduce the volatility in your account and have better diversification. Step 5, trading long and short. This also helps with diversification. You don't always want to be exposed to one side. And for those of you who don't know, trading long means that you're betting that the asset or instrument is going to go up in price. And if you're trading short, you're betting that the instrument or asset is going down in price. So you can actually make money if markets go down by shorting, especially with futures and options and foreign exchange is a little bit easier than stocks. So trading long and short helps you, find opportunities and ways to make money in both ways. And lastly, you always want to test a trading system in a simulation environment or a paper account prior to running it live. So when you're putting real money on the line, right, you're going to have, you want to take the best possible approach to be successful, right? You got to think of trading like a business. So by testing your trading system in a simulation environment or a paper account where you're not risking real money, but you're monitoring the strategy and how it's performing with live data, just not with real money, it allows you to, see how it's doing in the current market environment, right? Right now, for most markets, it's a little bit choppy. There's not much trend moving happening. We're not really seeing new highs or new lows being broken. So if you develop a trading strategy and it back tests well, you include slippage and commission, you test out of sample, looks good. It's trading different markets. It's both long and short. You still want to see if it's doing well in the current market environment because it may not be. So what I like to do is I like to put any of my trading systems that I'm going to run live in a paper account or a simulation environment for at least 30 days. And if it makes money in those 30 days, then I'll run it live with real money. And if it doesn't, I keep it there and keep monitoring it until it starts making money before running it live. And that way it kind of filters out some of the bad strategies. Sometimes you'll develop a strategy and it just won't make money going forward just because, either it's overfit or it's just not doing well in the current market environment. So my trading philosophy is pretty much, as I mentioned before, I specialize in algorithmic trading and I trade the futures market. So futures are a derivative. They're like options where they're basically contracts based on another asset, an underlying asset. And they're leveraged as well. So they're not the same as stocks. They're a little bit different, but that's mainly the instrument that I trade. And overall, my goal is to find great edge in the futures market and outperform traditional investments using automated strategies that remove emotional bias. Now, I didn't like putting that word emotional in there because you can still be emotional when your money's on the line for sure. Your emotions are still going to be there, even if you have an automated trading strategy. When you're down 20% or up 10% in a day, you're going to have emotions, and that's part of it. But automated trading strategies does remove a lot of human error, which I like a lot, and allows me to scale and trade a lot of different instruments very quickly. So as a manual trader, I wouldn't be able to do that. So let's talk about my portfolio design process. How do I build a portfolio of strategies? How do I go to 1 strategy to 10 strategies? So I have a massive library of entry and exit ideas. I have a big Excel sheet. It's got like over 5,000 rows of different strategy ideas with different entries and exits. So an entry could be, like I talked about earlier, buying on Monday, selling on Friday. It could be buying on some indicator. It could be buying on a day of the week, right? It could be buying when a news item hits. There's lots of creative ways you can buy into an asset, and exits as well. I test different exits. So, setting profit targets. If I'm up $1,000, sell. If I'm down $500, sell. If I'm up for 3 days in a row, sell, that sort of stuff. So I have a huge library of different entry and exit ideas that I test. And every day when I have some time, I test these ideas, and I have a process of finding successful strategies through testing. Number 2, I'm always testing ideas with 10 plus years of accurate historical data. This is a given. I want my strategies to do well historically. I want some confidence that I'm running them live, that they do well over 10 years. My strategies don't make money every year, but they better make money most of the time, for me to be confident. If I don't have confidence in these strategies, then running them live is going to be tough. So I want confidence, and to get that confidence, I need to test with as much data as possible. Number 3, grading strategies based on Sortino ratio and picking top performing strategies. So Sortino ratio is a metric or a calculation to measure sort of the volatility of the strategy that is going to happen. And when I say volatility, basically the rate of change in the P&L of up and down. And Sortino helps measure that. It helps measure each strategy and how well it does when it's up and when it's down. The higher Sortino, that means more often it's a winning trade and it's winning big, and the losses are pretty small. So I always want to find the best Sortino strategies. That's sort of my metric. Number 4, I run correlation analysis with my other strategies, right? So say you have 5 strategies in a portfolio. If they're all correlated, meaning if they all do the same thing, then basically you're trading 5 of the same instrument, right? And it can be tough to trade when they're all wrong, right? I've had days where I've had correlated strategies all be wrong, and then I lose on each strategy. And when you lose with 3 or 4 strategies in a row at the same time, it's tough. So it's tough to keep going forward. So you want to reduce your correlation and find strategies that are negative or low correlated so that they're not all losing at the same time. And number 5, as I mentioned before, test strategies in a live simulation environment to ensure robustness. So this is running it in a paper account or simulation account for 30 days. And if it's profitable, then I'll run it live. But I want to make sure it's working in the right environment without risking my own capital. So currently I've built and tested over 500 strategies, and I've narrowed down to 38 that pass my criteria. I think I have 33 now. I've removed a couple in the last month or 2. I use walk-forward analysis, which I'll show you guys, to ensure we're not overfitting our strategies on previous historical data. So overfitting, which I mentioned before, it's easy to keep tweaking a strategy to make it perfect in the backtest, like keep tweaking it to make more money, more money, more money. But if you do that too often, what happens is you overfit, where you take the strategy, you tweak it so much that it's good historically, it's good from 2008 to 2022, but when you run it live in 2023, it's not good. And walk forward solves that problem. I'll show you in a bit, but it solves that problem of overfitting. I also use what's called Monte Carlo analysis to test the robustness of the portfolio. And this is a tool that kind of randomizes my portfolio to test with different market conditions. All my strategies trade long and short, with a slight bias to the long percentage. So I have 52% long strategies and 48% short strategies with a focus on intraday. So most of my trading systems are day trading, the intraday. They sell all positions before the market close. We like doing that at the family office to reduce our overnight risk. And with futures, there's a lot of opportunity to do well intraday. So I mentioned walk forward optimization. I want to explain what that is. So what walk forward it's a way of optimizing your strategy parameters with recent data to adapt to current market conditions. And we use this on individual strategies. So I want to optimize my strategies every maybe year or 2 to make it good for the current market, right? I don't want to develop a strategy and then set it and forget it. Just like any good trader, you kind of need to adapt to the current market, and walk forward helps solve that. So here's an image of walk forward optimization, sort of how it works. You have an optimization period in days, And when I say optimization, basically when you have a strategy idea, you can tweak different parameters. So for example, say one of your parameters was a profit target, right? Sell when it's up $1,000, right? What if you sell when it's up $1,000 and $100? What if it's up $1,500? What if it's up $2,000? That parameter you can optimize. You can test different ranges, and it's going to pick the best one. So it will optimize for a period. I like to do a year, and then test for a period. It will save that. It'll find the best optimized period. So let's say the best profit target was $2,000. Then it will save that $2,000 and test it with new data. And it's going to tell us if it's robust or not. If it's robust, it'll keep making money with that new data. If it's not robust, it won't make money. And we'll see that in our backtest report. If we use NinjaTrader or TradeStation, it'll tell us in the report card if it performed well. And walk forward you see that it iterates forward. So it iterates for days, tests with new days. And then now you see the optimization period shifts to the right and then tests with new days. So it's very powerful. So I like to do it yearly basis. So every year, at the start of every year, my strategies re-optimize, and it will use the previous year as the kind of in sample period, and then save the parameters for the current trading session. So right now, all my strategies are using the 2022 period to have the best kind of settings going forward. And this allows you to adapt to the current market and get new out of sample data to test for robustness. So that's walk forward. Another tool I use is Monte Carlo, which is a tool to also test the robustness more of your portfolio. But basically what Monte Carlo does is it randomizes the order of your trades. When you run a back test, the chronological order is what happened in the back test. But what if you took the middle, maybe cut it in half and you shifted it? Or what if you took all the losing trades and put it at the front? Would your strategy still be profitable? That's what Monte Carlo does. It randomizes all the order of the trades and gives you sort of an average. Here's an Excel sheet built by my friend Kevin Davey, who's also an awesome algorithmic trader. He's been doing it longer than I have, and he's from Ohio. He's a really cool guy, and he's been trading his own capital since about 2005. He built this Excel sheet to run a Monte Carlo analysis and give you another report card of how robust your strategy is. So on the left here, these are individual trades. So you'll see $0, 5,000. So those are from your back test, right? You would just paste those in there. And then at the top left, you could put your starting capital. You can see it's 135,000 and your stop trading capital at 100,000. So basically if your account balance starts at 135 and that'd be your starting capital. And then if it hits 100,000, it's going to stop. It's going to stop trading. And then in the yellow, when you hit calculate, it tests different starting equity values and gives you sort of a report card of each equity value. So the first one is 135,000. And the ruin, you see the ruin column, which is to the right, that's 2%. What that's telling you is you have a 2% chance after the Monte Carlo randomization runs, you have a 2% chance of hitting your stop capital, which is 100,000. So it's a very low chance, right? And the Monte Carlo helps me give me a percentage chance of not really blowing up, but hitting my stop capital. And this is what I use for my portfolio of strategies to know how much capital I'm going to trade. And you can see when it goes up in capital, the next row, it says 168,750. There's a 0% chance of risk of ruin, right? Because now the starting equity went up and then it keeps going up until it stops about 10 rows later. So this Monte Carlo simulator is super helpful for individual strategies and for portfolios on giving you how much capital you need and your percentage chance of blowing up or hitting your stop capital. And this is built by Kevin Davey. I use this. He gives it out for free, but it's a really cool tool. Here is a platform called TradeStation. I mentioned it a couple of times, but here is some trading systems running live. And then basically you see a bunch of charts, right, with green lines and red arrows and blue arrows for buys and sells. So these trading systems I actually didn't build, someone else built, but I was operating for one of my clients. I still operate today. But this is sort of what an interface may look like for running your strategies live, where you have a chart and then you have sell and buy signals with different instruments. all these instruments here are actually NASDAQ futures. You can see the symbol is at NQ. So all these systems trade NASDAQ futures. Here is a screenshot of NinjaTrader. This is the platform I use for my own trading strategies. And this is actually one strategy that I launched live in March. And you can see when I took the screenshot, it was doing pretty well so far. Obviously, I did this PowerPoint quite a while ago. I haven't updated this. But on the bottom, you have an equity curve, which is basically how much profit the strategy has. And yeah, this is sort of the NinjaTrader, I guess, interface, if you will. Here is NinjaTrader as well, and this is the backtesting. So this is not real money. This is just backtesting historically. And you can see on the bottom, we have an equity curve. On the top, we have, how well it did on a daily basis. And on the right, you have some parameters for the strategy. So all those stuff, all these check boxes and inputs on the right here are parameters. And this is backtesting. This is initially testing your idea of buys and sells. And obviously this strategy looks pretty good. It did well over the last 4 years from 2018 to 2022. This is what I do day in and day out, backtesting new ideas, making sure they're robust before I run them live. This is another strategy analyzer equity curve of a system. And you can see recently it hasn't been doing well. It's made a new equity high around December 2022, but you can see after December 2022, it's kind of been on the downtrend. It's been losing money. And this will happen a lot with a lot of your strategies because they don't always do well. Sometimes they do well for a period of time, but they're never perfect all the time. So my areas of focus are pretty much capitalizing on repeatable patterns and volatile moves. I want to find patterns. I want to exploit them and find strategies that do well and be ready when volatility happens. You'll find in this space, you'll make a lot of money when volatility happens, right? When nothing's going on, you won't make money because there's just no price action. There's no movement. So that's when you make money, when things are volatile most of the time. I want to invest in multiple uncorrelated strategies. I want to be as diversified as possible. I want to reduce the volatility in my account. I don't want my P&L going crazy, my losses going crazy. I want it relatively stable up and to the right. So to do that, you need uncorrelated strategies. And I build strategies through rigorous analysis, back testing, walk forward, and out of sample testing, which I mentioned before. My long-term goals are to explore more exotic futures markets, such as currencies, commodities, and international markets, building more than one portfolio that are custom tailored to the overall arc, and, outperforming traditional investments and build a track record to take outside investors. I want to beat the S&P. I want to beat the NASDAQ index. I want to beat the Dow Jones. I want to outperform them and do better than them, so that I can say, hey, better than, I did better than buy and hold for these instruments, and, potentially make a business out of that in the future. My technical stack, as I mentioned, I use NinjaTrader platform to run, build, and test my automated strategies. The language in NinjaTrader is C#, which is the Microsoft.NET programming languages for strategies. And I use Amazon, AWS, Amazon Web Services, EC2 servers to run production and develop environments. So I don't run my strategies on my local computer. I run it on a VPS, which is a virtual private server. And I use AWS to do that. I have some internal tools that I use to generate automated strategies using AI. So I have my own tool called Stratgend that I use to generate strategies for me, and to help me find alpha or find good strategies. And it mainly uses grid searching techniques to find those strategies. So grid searching is basically you give a range of parameters and then you say, all right, within this range, find me good strategies. So that range could be, test these different indicators or test these different markets and tell me like the 10 best performing ones. I'm setting up a grid with limits and it helps me find those strategies. And yeah, we do rigorous testing by the team. So some strategies we build from scratch, some we use from Stratgend, but we take them and we test them out of sample. We test them for robustness, test, because it needs to be good, right? It's very easy to lose money in algorithmic trading, and you have to do a really darn good job to make money. And part of doing that darn good job is testing. Summary, using smart analytics and predictable patterns, I find edge in futures markets and truly believe it can outperform most traditional investments. Year to date, I'm doing pretty well so far. If you guys check my YouTube channel, you can see how much I'm up or down. But I'm definitely outperforming the markets as of this year. But I want to do that for the next 10, 20 years going forward. So that's my overall goal. And that's it. That's the presentation. There's my name there. There's my email if you want to send me an email. My YouTube channel is just my first name and last name, Jacob Amaral. And I appreciate all of you putting your half an hour of your day to listen to me talk and ramble. I appreciate it. And Don, thank you for the opportunity. I think there's some questions here if I can answer them, Don, if that's cool with you.
Please do.
Okay. Hi, what's your, so my YouTube channel. Okay. Yeah. Goran put the link in there. Thank you, Goran. Will the slides be available after the presentation? I think so, Rabid. Don, you're recording this, so I think they'll be available.
If you want to make them, we'll certainly make the recording available, and It's up to you whether or not to make the slides available. It's up to you.
Yeah, I'll send. Can I send you the slides, Don, and you can email them, or
yeah, please do. And if you don't want to send them all, just whatever you can send will be great. Thank you.
Sounds good. Okay. John has multiple questions here. So the first question is, given that NinjaTrader is just a normal Windows application, what ready for production steps have you taken for the stability and reliability side of running NT in production with real money? So while NinjaTrader is a normal Windows application, John, it's been around for almost 20 years. So it's very robust and reliable. But what I've taken to maintain the stability, well, I have backups of everything. I have a redundant server with the same installation of NinjaTrader in case mine goes down. I guess that's more of like an AWS Windows thing. But for testing my strategies, I always test that they technically work in a SIM account. So I will, after I'm finished backtesting and confident that the backtesting process is complete, I'll run it in a SIM account on a separate server, on a separate NinjaTrader instance for 30 days. So that kind of helps with stability, because if something's crashed or broken down in that 30 days, I would have been alerted of it. And because it's not running live with real money, I would have low risk on it. So if it's not crashing after 30 days, then there's obviously a good reliability component with it. There is some small things that I do to keep it reliable. One thing I do is every weekend I will close NinjaTrader and restart the Windows instance just to clean out some of the memory and the cache. But other than that, it's pretty reliable. I don't think I've done anything else to be, I trust it. I've been using it for over 3-4 years now, and they've been in business for 20 years. So if they've been in business for 20 years, then they're doing something right. Have you heard of NinjaTrader waiving commissions entirely? No, they always charge commissions. Always. There's no way to waive it. How many trades a day, month is necessary for that? Yeah, as I mentioned, I don't think they waive commissions at all. I trade quite a bit, and they definitely don't waive it. I noticed that even with slippage and commissions enabled, my paper trades for a system did not match my live trades on NASDAQ. I had relatively tight stops. Have you run into this? Yeah. So if you haven't built your strategy correctly, your back testing will not match your real time, meaning your real time results could be different. So even with slippage and commissions enabled, there's a couple other steps to make sure they match. If you have tight stops, what I recommend doing, John, is when you're back testing, change your order fill resolution to high instead of standard. And what that does is that builds the candlestick or the bar in the correct order. Usually with tight stops, what's happening in the back test is that it'll say your stop never got hit and it was profit, but in real time, it did get hit. So try changing your order fill resolution to high instead of standard. That might help you. How large of losses targets do you think is necessary with NinjaTrader to overcome this phenomenon? Yeah, I like my tightest stop is usually, on a dollar basis, maybe $300-400. So a NASDAQ, that might be like 15 to 20 points, I guess. But that would be like my tightest stop. Most cases, other cases, I'm using some type of trail stop or ATR stop that's wider. And the wider stops are better. They're just more realistic. What do you think of NinjaTrader's built-in Monte Carlo calculator? It's all right. It's not as good as the Excel sheet from Kevin David that I showed you earlier, but it's okay. It can still be used, and it's reliable. For you personally, how long of a drawdown / do nothing period is too long during a backtest to include in your portfolio? It's a good question. I guess I don't really measure. I don't really care the length of a drawdown or do nothing period. Usually all I care about is the return to drawdown. How much am I making versus my max drawdown? The Sortino ratio and the average trade. Jack says, is there any, oh, sorry. Who was that?
Sorry. I was just going to say thank you for answering all those rapid fire.
No problem, John. I hope you, I know that was a little bit fast, but yeah, I have no problems with that. You can email me anytime on other questions.
And
Yeah,
by the
sure.
way, John, you also trade NinjaTrader, is that right?
I tried pretty hard to get a very specific system working with NinjaTrader. And I was basically trying to copy someone who had returns that seemed too good to be true, and certainly not saying it's impossible, but the reason I am still here talking with all of you today is because I'm obviously not wealthy beyond my largest dreams. But anyway, yeah, had a lot of experience with NinjaTrader. Tried what you said with the candlestick painting, and tried to do all that stuff. So I still have the license. It's it's a lifetime license, which is cool. So might be able to get back into it. But
well, if you have any questions maybe Jacob can help if you raise any.
Oh,
I mean, we've got a few minutes here. I know other people have questions, and we'll get to them, but we got 15 minutes here.
Well, please go on to the other questions, and Jacob.
Okay, we'll come back to you. Great.
Email for sure.
I appreciate it, John. I didn't expect anyone to actually use NinjaTrader, so that's awesome. But yeah, I can answer any of the questions after. Jack says, is there any coupons for? So yeah, I didn't mention I do have a course, Coding Great Trading Bots. Jack, I don't have any coupons at the moment, but if you reach out to me via email, I'll let you know in the future if I do. Martin says, do you use order flows with your NinjaTrader, as it allows you to create automated trading systems? Martin, I don't use order flow. I'm aware of the indicator, but I don't use it for any of my trading systems. I just haven't gotten around to exploring it. I'm pretty sure there's lots of opportunities for trading systems with order flow. I just haven't used it personally. Suresh says, do you use SMC concepts in your NinjaTrader scripts? I'm not sure what SMC means. So Suresh, let me know what that stands for, or if anyone else knows what that means. Smart money concepts with my NinjaTrader scripts. Oh, sorry, I hit the mic there. I mean, I use risk management with most of my scripts. Are you referring to order block, supply and demand zone? I do have a supply and demand zone trading strategy that I actually made a YouTube video on. So I guess that's a smart money concept. I don't use order blocks though. But yeah, all my strategies have a risk management component where it'll stop if it reaches a certain amount of money, or a down trade or up trade, or based on other indicators. So I think that answers your question, but I do have a supply and demand zone trading strategy that I actually show you how to build your own on one of my latest videos too. And it's actually been doing pretty well recently. Alexander says, what platform or packages to get quickly up to speed would you recommend if I prefer Linux Python environment? Can you share Kevin's Excel sheet? So platform packages to quickly get up to speed. So if you want to use Linux and a Python environment, Alexander, an existing platform is Quant Connect. So Quant Connect, you can code strategies in Python. However, you can only do it through their website. So they have their own Python editor, and you can backtest strategies and you can run strategies live. If you want to use your own engine on Linux or Python, I would check out the Lean engine, Alexander. Like Lean Meat, Lean engine, Lean. And it's also used by Quant Connect, but it's a backtesting engine, and I believe it's all in Python. So you would love that, and it would definitely work on Linux. So it's a lean engine. Check that out.
And they've open sourced that. Is that correct?
Lean engine is open source. Yep.
Yeah.
It's really cool.
Mhm.
Yep. Richard says, I'm a NinjaTrader programmer too. What type of bars do you find work best on day trades? So Richard, I would I find that, stick to traditional bars, traditional candlesticks, but try different bar ranges. Like personally, I have some systems that do well on 1 minute bars. If they have a lot of filters, and then I have a lot of systems that do well on 60-minute, 120-minute, 40-minute bars that are a bit longer. But try and stick to normal candlesticks. Renko bars and Heikin-Ashi bars, they're just too complex. And what you'll find is sometimes the more complex solutions don't work as well, don't make you as much money. So stick away from those. And Richard says IBKR, which is Interactive Brokers API, works great with Python. Yep, it does. The IBKR API will allow you to submit orders on the brokerage account. It doesn't allow you to backtest or anything, but allows you to get data and submit orders, and it's a good starter. John, I don't have any systems that run on tick bars. Those are really small, high frequency bar sizes are really tough to make strategies for. It's really tough to find repeatable patterns that can make you money on tick sizes just because they're so noisy. So I haven't had success with them, but there is opportunity out there. I'm sure there is. I personally haven't had success, and usually I'm trading 1 minute and up. So 1 minute to day bars for the most part. John S says, any good options, algo trading platforms? Yeah, I'd recommend NinjaTrader personally, TradeStation, Quant Connect. Those three are pretty good. They all have what you need. They're all affordable. Most of them are free. You just have to fund money in an account. And yeah, I'll post a link to, it looks like people want Kevin's Excel sheet. I'll give you guys the link for it.
Okay. If you send them to me, I'll make sure they go in the descriptions.
Okay. Yeah. I'll put them in the chat, and I'll send them to you as well, Don.
Okay. I think we can get the chat too. Yeah, we will save the chat too. Either or both is great. I guess we should also ask you, have you, what courses, supposing people do want to get a little bit of help cheaply in starting their own system, what courses do you offer?
Sure. So I have one course. It's called Coding Great Trading Bots. And I've taken all the knowledge that I've learned over these 4 years trading and kind of made it simple to learn and understand and how to build good trading systems. I'll share it on the screen right now. That's my course webpage. And I think it's one of the best courses out there, because not only do I show you, how to code strategies, how to build them correctly, how to test Monte Carlo and walk forward, but I also give you my own strategies that I trade, as well as software to learn how to build strategies. So here's the curriculum here. I also show you how to operate NinjaTrader, how to run stuff on a VPS, tons of stuff, but it's really good for any beginner or intermediate trader to learn how to build good trading systems. And that's why I named it. We also do live sessions where we build strategies together. Actually, tomorrow at 1 p.m. Eastern, we're doing a live strategy building session where we're going to build a strategy together, and I'm going to share it with everyone. So, yep, that's my course, Coding Great Trading Bots. I think it's one of the best. There is some other courses that I could recommend that are not mine or books. I don't know if that's cool with you, Don, but yeah.
No, go right ahead. Sure.
So, other courses I'd recommend taking, if you're more focused on Python, or you want to build your own, say, infrastructure from scratch. So instead of using a platform, you want to build something from scratch, which most of the time I advise against, but if you're an expert programmer, then maybe you want to do that. There's a really good course by, hold on, let me find it. And this one's free, I believe. Yeah, free Code Camp. My little brother's actually taking this right now. Free Code Camp. It's on YouTube. Algorithmic Trading Using Python full course. This is a really great course if you want to learn it through Python and you want to build your own infrastructure from scratch. My course will help you kind of get to building portfolios quicker and being a better trader and coder. This course will help you more become a better coder, not really a trader, but it's a good start. So Algorithmic Trading Using Python full course, it's like 4 hours long and has everything you need. As far as books, anything by Kevin Davey is great. So Kevin Davey's my friend. He's an algorithmic trader as well. Just Google Kevin Davey books. He's got a bunch. I took it. He has a course as well, which is really good too. I haven't bought his books, but I took his course and it was good. But yeah, he has his books are good for beginners if you just want to get into it. His course is a little pricey, so for most people it might scare you off, and it's more better for intermediate and expert traders. But if you're a beginner, any books by Kevin Davey, and he also authored the Excel sheet that I was sharing earlier today. If you ever reach out to Kevin Davey, just say Jacob says hi. He would appreciate that for sure. But yeah, that's what I can recommend.
Fantastic. Well, did you have anything else you wanted to add before we let you go?
No, I think that's it. I mean, once again, Don, I really appreciate it. Thanks for reaching out via email and finding me on YouTube. Thank you.
You're very generous. I know that with 26,000 subscribers, we're small fries. So we really appreciate, and anything you send along in the way of, I know you said you don't have any offers, but any special highlighted, whatever, we'll post on. We're on both Aramir and on our own, so that we can cover both.
Okay, that sounds good. That sounds great.
Thank you so much.
Thank you guys. Appreciate the opportunity. Have a good Thursday, and maybe we'll do this again in the future.
I hope so. Thank you again.
Bye, guys.